Okay, guys, apologies for the mic there. Starting off right, let's kick off from here. It is indeed 22nd of October, Tuesday, my favorite day of the week, and we have that glorious beam in the sky shining above us. Absolutely fantastic. Great time to be alive. Okay, right. What have we got amongst us? I'm going to post this in the group later on today as well. This recording, I'll be posting all the recordings in the group just after I finish the webinars, in the sort of 30, 60, 90 minutes after I finish them. Right, let's get into things right now. I mean, first off, the pound has taken a breather. Okay, I'm just going to go and check out, for instance, pound kiwi. I've got one or two trades running on pound kiwi. Actually, I've done very well on pound kiwi, but I've also made the mistake as well of getting in at the top levels, at the tops of these rallies. Okay, it's only happened to me once on pound kiwi. It's been a huge rally. I've been a huge proponent of pound kiwi over the last 6 to 12 months, even going back to early 2017. But in the last 3 to 4 months, we had a nice sell-off back to the low 180s, and now we're well back above pretty much $2, $2 170 where we are now. We had a lovely buy on this last week, made 190 pips. I know one or two of you on the notes of the last trade talk made well in excess of that because you held on, and the rally which we bought here, I'm just going to delete that in a moment. The rally that you got in on, just go back here. You rode that up well above $2.20, all the way up to sort of $2, 400, 500. So you made 300-400 pips on that, which is fantastic, more than I made. I made less than the 190 actually. I managed to, I got out, I think, well, we took a roughly 190 on another account. It took 150. I've made 700 pips before on pound kiwi, so it's give or take. And right now the market's just coming back and just naturally retracing. Okay, we're going to get this retracement here like we did before. All right, before we sort of topped out at that 199 level, you know, $2 in the midst, and it got a little kickback, and we're now going back down. It went down 700 pips. You know, pound kiwi doesn't mess about. When it sells off and just retraces slightly, it comes off 500-600 pips in a blip. All right, and it's already come off 400 pips from the highs here. So we may level off. You know, don't even be surprised if we level off down here. We've got a buy on the actual buy on the group on this, but if it gets stopped out, it gets stopped out. We can re-enter. Okay, always keep your limits safe. But we could level off around 199 back to previous highs. Don't be surprised if we see that before we then ensue bigger moves, okay? Because that's what we have been seeing to date. If I just zoom out of there, apart from the huge sell-off that graced us through the summer, since then we've just been having these kickbacks and a huge rally, then a huge kickback, and now that's it. So where do we come here? Do we settle at 198? Again, on the DeMarca trend line, possibly a 195, but either or, we're going to be seeing another bounce higher. We're in a bull trend. Effectively, we're in a bull trend, okay? That was confirmed well above 190, 198, 198.50. All right, so as long as 199 holds, we remain in a bull trend. And don't forget, the reversals in a bull trend, reversals in a bear trend are emphatic. They are very strong. Okay, so we can get huge down periods in a bull trend. Okay, so we could come off a lot more here before the market makes its way much higher, and I do think that is going to happen. I'm not giving financial advice. It shouldn't be construed as financial advice. It's my opinion only that we will get that later on in the year, post Brexit or into 2020. Okay, but yeah, there is temporary relief and a huge DeMarca resistance there at just over $2.50. If that breaks, we easily smash through 210 on pound Kiwi. All right, we will rally 600-700 pips in very short space of time once that breaks. All right, but the fact, just to sum up pound Kiwi, the fact that this line here has been broken, 199 effectively, okay, all bar a few pips, 199, that's broken. That really tells us and dictates to us that, you know what, we're now bull trend confirmed. It's only if the market dips back below that line that we could potentially then go back into the mold before of potential sideways action between 190 and 197 for the foreseeable. But I do expect volatility. I do expect big moves in the days up to Brexit and the days after and the weeks after. Potentially 700,000-800,000 pip moves. Okay. Right, let's go on to the next one. Let's leave the pound. Let's look at pound dollar actually. Very similar. Okay, so again, 130, that median line that we spoke about before. So if we go back, let's go back on a week. Let's go back on a weekly. Okay, I'm going back here. Huge head and shoulders. It's the mother of all head and shoulders patterns, isn't it? We see here, got the head. Okay. All right. We've got the shoulders here. So, excuse me. 140 to 145 was that head for quite a while, and we got the shoulders on the low 120s as that base. Then sort of the neck area around that 130, just over that 130, 135 level. But the median line, as we spoke up before, is that 130 level. It's around that level there where a lot of the market action has been seen. Okay, and it's come in as support and resistance so many times over the last 3 years, 3.5 years, where we've dipped below. It's been a temporary ceiling, rallied through, come back, held around. It's been a magnet for price over the past 3 years for dozens of weeks. Okay, so the fact that it's now entering that price point again, that this trading zone, it's going to be potentially either huge resistance or we're going to get a nice huge bust through that level up towards 132, which is the next marker resistance, and potentially higher than that again, back to 140, which was sort of that head area that we saw before, 142 or so there. And we could see that in a very quick succession as well. Once that 130 level is broken, okay, beyond there, it won't be long before that 140 level, previous resistance, pre-Brexit resistance is seen. Okay, so right, let's just delete all those drawings there and go back. And if we go back a little bit further as well, it's just interesting to see where we were only in 2014. Look at this, 170 in 2014. Can those levels be seen again? Can these levels be seen again? That's what I want to know. Only mid 2016 before 145. Let's go back 2014. That's what we're looking for. 2014. Yeah. Right there, May, June, July 2014. And we've come off, you know, in total, it's just been huge, hasn't it? It's been absolutely massive, 5,000 pips selling off to the lows. So for me, the temporary resistance is that level there, DeMarco resistance. That's what we've got to get through, even though 130 is really the key level. It's the psychological level. 130, 184, as you can see there, the green resistance. That's really the level, the big level. 130, yes. Psychologically, it's good. and it's around level. The broader market is looking at that level, and that's where it's taken up all the strength it could muster over the last few weeks to get to. But if we really want to see hone in and get specific, it's this DeMarca level here, the DeMarca weekly, which is a huge resistance, which less traders will know about, especially novice rookie traders. Again, just to confirm, 130, 184, that is the key level where the market needs to remain above to ensue those levels of 135, 140, 145, even eventually 150. But to hold of any gravitas towards those pre-Brexit levels, 130, 184 has to hold for at least a week. Okay, it's no use just popping above and then selling back below. That will confirm that it's even bigger resistance. The fact if it peaks up and it can't hold above there, if the market was to get above there for 1 or 2 sessions, few candles above, and then make its way back below, that for me then it's resistance for many more months to come, potentially years. Okay, it could blip up above there and come right back down or in and around Brexit. Okay, so don't pay if it's just hours above there or a day or so above that level. That can't, it needs to be 5 to 6, between 4 and 6 trading sessions. Okay, normally I'd say 3 trading sessions, but the fact that we've got so much volatility ahead of us and we're going to have so many ramblings and interpretations post Brexit, and the wider market is going to have to factor this in, I want it to be above there for nearly double that period of time that I would normally say is acceptable to confirm it as a new support. But let's move on anyway. I'm taking my time on that, guys, and going into the pound pairs more so than I normally would, because we're at crucial times here. All right, let's have a look. Let's look at dollar yen. Dollar yen is one that for me is going on daily for that. Daily again, we're on DeMarca resistance, a previous high, the most recent previous highs all lined up there. We're now in a lovely wedge. We're going to see action back lower within 108 and then a break back above 109 or below 107.50 will confirm where it's really going. For me, over the long term, I'm not bullish dollar yen whatsoever. We could get up towards that 110 level again, which is again another big median price, like 130 is for pound dollar. But for me, over time, I just see this heading back lower. I just can't help but just see weakness in this market. Just the price action, the chart just looks horrible. We've got, we made a lovely bottom there, double bottom. But we just managed to get up 75% of the previous highs, and since then we've just made lower highs again, another bottom, but come back, barely made those highs again, and again lower highs, and for me, I just think they're going to get lower and lower, these rallies back down towards that 100 level, which is effectively parity for dollar yen. So I don't think that's good. But for me, I'm selling rallies up towards that 110 level. 112 would be fantastic level for me to get in, because like 130, 184 for pound dollar, the resistance, the market resistance on a weekly, there's 112.49. If I can get close to 112.50 to sell, for me that would be unbelievable. Again, not advice, but I would be loving that entry on dollar yen to short. And that'll definitely be a trade going into the group for that. Let's move on. Let's look at gold, guys. I'm going to check out gold here. It's one that's, I've been a gold bug for many years, and trading gold for, traded gold for the hedge fund that I traded for. Not physically, just traded the CFD. But we've definitely broken higher. What the level that gold had difficulty with for several years was 1365. Okay, 1365 was its nemesis. All right, I always remember it always rallied up to that level several times before selling off, notably the one before the election when Trump took office, rallied for weeks and then hit that 1365, pretty much there or thereabouts, and just dipped off. Again, this is the period that happened, into November, and then it spiked up, touched that, came off, and it's hit that point 3 times since here, and then sold off. But now since we broke that here in June, July, the market hasn't looked back. It's only took support here at the higher lows here, much higher lows at sort of 14.79, which is well over $100 above previous resistance, okay? And it's nestled here tidy. It's just 5 to 6 times now it's hit this level on a weekly basis and held 14.79. So for me, this confirms a lot of things. It confirms that the market is happy trading as support on at these levels, which means that's a huge bullish sign, okay? The fact that it's just happily tucking itself in there, and this is where the DeMarca trend, DeMarca support resistance has married up here, and they've coiled into this 1487 region now, and we will see a break back above 1530 or back below 1440 real soon. I favor the higher side. I have to be honest, I was bearish myself, personally calling for, and I got caught out trying to selling this around the 1485 to 1500 level. I didn't really make any money, lost a little bit. It was nothing really to write home about, but again, it's just in a range. You're not going to gain much or lose much at the moment with gold, but here right now, it has to make a move in the next week or two. We've got 1 candle left, 1 week left before really the market has to break out of this joint pattern here. Where is it going to go? Is it going to go up? Is it going to go down? If it goes up, we need to rise back above 1510. For below, back below 1465, and below 1465 opens up the gate for a potential sell-off back towards previous resistance, which around that 1360 level, 1355, 1365. But back above, we're heading towards the previous highs of 1560. All right, which again, the DeMarca resistance on this, if we just get the crosshair, DeMarca resistance is 1576, and that's taken into account the years previous that the market was, well above $1,600, $1,700, 2011, etc. So 2012, 2013. Well, it's made its highs, didn't it, in 2011? So yeah, from 2011 to 2014, again, it's factoring all that in. So 1576 is definitely the next target for that if we break out of 1487. So again, a nice trade on there, 900 pips to be made, depending on how you look at it with dollar, with XAU USD, I should say. But it's going to be very, very interesting. Okay, our arrows have coiled up well. This particular blue one here caught on the weekly. The blue, it was delayed by 2 weeks, and then after that, it absolutely was on fire. This arrow here knew something was coiling, and it just absolutely, we've not seen moves like that in several years, and it's fantastic. So where we are at the moment, we're going to play close heed on the dollar. Let's have a look at Kiwi dollar. Again, looking nice. Again, excuse me, guys. Above now, can we get a weekly close above its DeMarca resistance, which is 64? Pretty much there. It's 63.99. Current price is, what's the current price? Yeah, it's pretty much 64.18, isn't it? Yeah, 64.18. So we're pretty much 20 pips above that DeMarca resistance. Can it close above there? Well, that would be fantastic. It's a solid blue on blue. We've got our own strategy for this. The blue arrow on a blue candle means quite bullish, depending on a few other elements in and around that. And we're looking to buy up above here now. A Kiwi dollar for me, it looks from decidedly extremely weak, and I was selling bits of this in and around sort of July, August when I was moving house back in the summer. Missed a good bit of the rest of the selling, and since it's come back, I have been looking at this to buy, and I will be looking to buy this personally shortly as well. So that is that one. Let's look at Aussie dollar. Let's look at Aussie dollar. Again, similar. Okay, we're going to go on a daily for this. Similar to Kiwi dollar. Let's look at a daily. For me, it needs to get above. Let's just go back here. Yeah, a notable previous high there, isn't it? Got that out. I'm just going to go to the low there. I'm just going to get a fib up. Man, I am tonight. Okey-doke. Right on that 50, isn't it? And look how that came in. This notable sell-off from the previous highs. Right down here. Not the most conventional way of doing this, but it works for me. Check that out. That 50% line there has come in as resistance, hasn't it? And again, right here. So for me, again, it's that 50% line. We want to get above there. The target for me, and I find this regular, when it fails a 50% line and it one time, but then breaks it on the second or third attempt, it usually blitzes through the 61.8 on that very move. All right. And then whether it targets the 100, I've not got all the backtracking for that, but generally it does need to do it within 3 goes. And the first one just repels and says, you can't do this, go away. But it comes back and it means business the second or third time. Usually the third time again is stronger. You know, that triple sort of top bursting through that will alleviate that steam, because pretty much think of it like a coiled spring. Think of it as an energy restore, and you get knocked back, you conserve an energy. Another attempt, you get knocked back, you build more, you learn more, come back, you get knocked back. And then the third time is make or break. And when you bust through all that frustration from getting knocked back 2-3 times previous, you then fly through and crash down the next load of hurdles, which is the 61.8 en route to the 100% retracement line. So for me, it's a big deal, the 50% line. Let's just go back. Let's get the background back up. So the 50 line, yes, it's just that level of 68.80 pretty much. So 68.80, it's now 68.60. Again, we need to close above there for 2-3 sessions to really see potentially a rise towards that 61.8 and above, towards that 70 line. That's where it wants to go. So again, to make 200 pips out of this, the market needs to hold above, get above and hold above that 50% line. Okay. And I'll look for some arrows to confirm that on the back end. We've not got any blue arrows at the minute, but I'll look for further confirmation for my DeMarca arrows to appear. And let's hope they do in and around this level. That would be fantastic, actually. All right, guys, right, I'm going to leave it there. I've got a few things I need to do here. I'm going to update in the group shortly as well. We might have a trade later today. Let's see. Okay, so I'm just going to leave it there. A bit of a shorter one today, but hope you enjoyed it. I'll update more on the Brexit stuff and fundamental stuff later on in the week as well. So I'll see you here next time. Have a fabulous day, and I hope you take care of yourselves and make some money. All the best. See you soon. Bye-bye.